All right. Well, thank you, Jeremy. Hopefully everyone's having a good morning today. Appreciate the invite here, Randy, Kathy, and Jeremy, for the opportunity to, have a chance to speak with everyone this morning. As mentioned, my name's Tu Yang. I'm with USI Insurance Services out here in Bloomington, Minnesota. We're one of the largest independent insurance agencies worldwide. I've been an insurance risk specialist for 15 plus years, helping families and individuals protect their most valuable assets here. Um, and Jeremy, I do have some slides here. Whenever I'm able to control the screen here, I can continue.
Yep, you should have it in about now. Yep.
All right, sounds good. Can you see that screen there?
Yes, sir. Yes, sir.
All right, perfect. Do you want me to hold off on another 30 seconds or a minute, or should we continue here?
That's fine too. We can start, and then I'll let everyone in who's coming in if they're late. And also, if they have any questions, they'll just put the questions in the chat box, or whatever you like. If you can, I can squeeze in the questions, or if you'd like the questions to come at the end of the meeting, that will be fine too. So let me know.
Okay, perfect. Well, welcome again, everyone. The conversation here is really about aligning real estate professionals and asset risk management professionals like myself. And today, the roadmap where we're heading this morning. We'll talk about current insurance market trends, what's really driving them. I take a look at insurance programs all the time. I'll discuss, underinsurance and coverage gaps affecting homeowners and their policies. Just common insurance issues that delay or derail closings. It's very important for you all. How realtors can stay ahead of these potential problems when you see it. And then I'll conclude a little bit about USI Insurance, our capabilities and resources really to protect your clients and keep the deals on track so you all can close on time and have a smooth transition. So before we continue the program, I really wanted to talk about, you all help clients achieve, home ownership, right? The dream of home ownership on the front end. And my role on the back end is really to help protect those assets, right? Your clients work so hard to buy a house, and we're really there to, protect that asset. So, there's no unexpected financial losses after closing that will impact them. We're here to help support you to have a successful closing, right? My job is to identify any insurance issues early on so that way we can avoid any last minute surprises. We'll dive into that here a little bit more. Really reduce closing delays and just create a smoother experience for everyone involved. So let's dive into the program here. Insurance market trends and what's driving them. Ever since the pandemic from 2020 to 25, it's been a real hard market, right? I've been into the industry for a long time. In the past 5 years, we've seen significant rate increases all across the board: home, auto insurance, property and casualty. A lot of carriers, insurance companies that I worked with, they were really restricting and pausing new business. I've never really seen that before. A lot of great companies, a lot of great rates. I'd go in there, try to get a policy issued, and then by the time you know it, they're just pausing writing business. And even some insurance carriers, they were exiting markets altogether. I mean, you hear about the wildfires out in California. These top insurance companies just pulling out of the market. Hurricanes in Florida, right? Carriers just pulling out of there. Even in Minnesota, um, due to the severe weather, some of them just pulled out of our state as well. Tighter underwriting guidelines and eligibility requirements. not too long ago, a lot of insurance companies will do a monoline home. And now a lot of carriers were like, hey, we can't write a monoline home unless it's bundled with the auto. So there's just restrictions on that. Eligibility requirements. Back not too long ago, you could write a roof that's 25 years old. A lot of carriers now, if it's over 20 years old, it just is automatically ineligible. They're not writing those risk anymore. And then also when we issue homeowners policies, a lot of insurance companies, they'll do an exterior inspection, they'll review the home, and they're just increasing documentations and photos, just making sure that the property is in good condition. Also, in regards to the hard market conditions, actual cash value on roofs, right? Depreciation on the roof. It's just becoming normal. You have a roof that's 15 years old. There's wind and hail damage. A lot of clients are not getting a new roof. It's a depreciated value, just like your vehicle, right? So that's becoming more normal. And then in terms of replacement cost, I'll go through that here shortly. There's just a lot of greater focus on accuracy. Someone buys a home, we want to insure it to full replacement cost. And that's making sure that if there's a catastrophic loss, the insurance companies know how to rebuild that home and at what value. And once again, it's just increasing emphasis on property conditions and maintenance. And we'll drill down to that in a little bit here as well. But over the past 5 years, it's been a really hard market all across the country here. And really, the question is why? Why are these? Why is it such a hard market? Well, number one, the frequency and severity of catastrophic weather events, right? There's just more of it all across the country. The number of storms and the severity. Now there's record-breaking billion-dollar weather losses. So the payout on these claims are just a lot more. In 2025, it set a record for the most expensive wildfire in history, right? Global natural catastrophes, is roughly about $155 billion annually. If we look at U.S. thunderstorms, it's 40 to 61 billion dollars. So a lot of these storms are forcing insurance companies to pay out a lot. Rising construction cost of labor and material. I mean, the cost of construction has surged over 35% within the last five years here. Increasing litigation and claim settlements expenses. So I'm not going to name the insurance company, but there's a huge insurance company that was writing homeowners policy and underinsuring the value of the home just to get lower premiums. So when it comes time for a client to file a claim to rebuild their home, it's not insured to value. And then obviously, as we all know, supply chain disruption during the 2020 pandemic, delays in materials and recent current events as well with tariffs and economic pressures, right? It's raw materials for steel, aluminum, and copper and everything that's impacting the cost as well to rebuild a home. So with all of that, when you talk about storms, for every dollar an insurance company takes in, if they're paying out $2, they're at a loss, which is why it's increasing premium rates. So there is good news. Current market trends for today, 2026. Insurance companies right now, the market's starting to soften. Profitability is starting to improve. Insurance companies, market competition is starting to increase from carriers. More insurance carriers are now actively seeking new business. Risk appetites, they're starting now to begin to open it up. Restrictions from underwritings are starting to ease, right? So, an older roof that's 20 years old, maybe they'll go to 35 years old now. And the good news, auto rates all across the country, they're starting to stabilize. In many states, they're also starting to reduce as well. So with the rate increases prior, it was kind of like a dramatic increase, but now, it's either going to be steady or just slight increases or decreases. So not as dramatic as before. So these are some of the reasons for the market trends and really what's driving them in the insurance marketplace. So in terms of moving on to the next section here, underinsurance and coverage gaps affecting homeowners. I take a look at insurance programs all the time, whether it's helping an excited new homeowner, first time buying a home, or a multi-million dollar high net worth customer with $3 million, $5 million home. Some things that I identify as replacement cost, right? So replacement cost is the cost to rebuild a home in case of a total loss, right? It's not the market value, and it's not the cost that someone purchased it, bought the home for. To give you an example, let's say you have a $3,000 square feet home on the north side of Minneapolis versus in the suburbs of Bloomington. Yeah, the home prices and the market values could be different, but the cost to rebuild is going to be the same regardless, right? So replacement cost is the key thing that insurance companies look at. Year built, number of square feet, number of bathrooms, is the basement finished? Is there any updates to the home? Is there a new roof? So it's really the cost of labor and material. Rising construction costs can leave homeowners underinsured if coverage is not reviewed regularly, right? So, for example, when I talked about litigation just recently, if someone bought a home 5 years ago, right? Let's say their home was 400,000. Well, with the cost of labor, material, and inflation, maybe that $400,000 home now to rebuild it could be 550. So, let's say there's a fire and there's a total loss. The insurance company is going to say, hey, you have your the home is undervalued. We can't rebuild your home at 550,000. You only have it insured at 400,000. So it's very important that your clients, take a look at that, right? So the next point is making sure that the client has either full replacement cost on their policy or guaranteed replacement cost. So what this means is guaranteed replacement is that the home was insured at 400,000. Now let's say there's a total loss and it costs 600,000 to rebuild the home. Because they have that endorsement, the insurance company will pay up all the way to $600,000. Yep, and as I mentioned, with the increased litigation and claim settlement expenses there, all this wrapped up is just in making sure that your clients can identify where they're underinsured on the replacement cost. And one other last thing on underinsured is liability protection, right? Lawsuits happen all the time. Someone comes by, slips, falls, sues you. Yet there's a swimming pool, someone hits their head, right? Dog bites. The liability limits on personal liability can quickly be exceeded. So it's highly recommended that you at least have $500,000 in liability limits to protect today's exposures. And also, in addition to protecting, your assets, so you don't have to liquidate cash to pay out, right? Is to have an umbrella policy. Umbrella policy protects you up to $1 million and more. So once your home and your auto policy liability limits are exhausted, the $1 million kicks in to protect and shield everything as well. So it's very critical and important to have these things. And I see it all the time. A high net worth client where he has like $100,000 liability, but he's got a $3 million home, easy lawsuit there if anything happens. So in terms of coverage gaps, These are endorsements. These are missing protection coverages on the policy. So, for example, water backup, sump pump, and overflow. What that means is that someone owns a home. There's water that overflows from the pipes, whether it's from a clog or anything, and now there's damage to the dwelling, the carpet, your personal property. It's excluded, unfortunately, or there's just a low amount of basic policy limits. I'll give you an example here. I had a client, um, stay-at-home dad. The wife was a C-level executive. Their home was roughly about $3 million, fully finished basement. He came to me. I took a look at his insurance program to identify exposures, helping them to find better rates. I said to him, CJ, you have this beautiful home and you have a fully finished basement. Your water backup, sewer, and drain is only at $10,000. I got him another insurance carrier. The water backup, sewer, and drain limits, I got it all the way up to the policy limit, meaning, you can get it up to 50,000, 100,000, but I got it all the way up to dwelling coverage A of 2 million, 3 million. A couple months later, I think it was roughly about 8 months later, he had a water backup, sewer, and drain of over $100,000. If I didn't identify that exposure, he would have had to pay $90,000 out of pocket. He would have had to liquidate assets somewhere else. Um, Service line coverage, very important. Think of your main line that comes from your home all the way to the city, right? There's cracks, repairs. This can cost thousands of dollars, $10,000, $20,000, and it's frequently missing from standard policies. So this is also important to add onto the homeowner's policy. And then lastly, ordinance of law and coverage, right? There's a home. It's built in 1930 or an older home, maybe 1900s. So now we're in 2026. City codes, right? The buildings have to be up to code. So if there's a total, the insurance company is going to build the home, to repair it where it was built, when it originally got built. So now you might be out of pocket $50,000 just getting your utilities or your electrical up to code. So it's important just to add these endorsements on there. So these are just a couple things here, uninsured, that I'm seeing from insurance programs and missing coverages that are really important. And why it's important for you as realtors, you're trying to help close a deal, get the homeowner into their beautiful new home, but it's just the right thing to do. If you see their policy, you're a resource for them as well, a trusted advisor. You're really just adding more value to them as well. So, in terms of the next part, common insurance issues that delay or derail closing. You all want to close on time. You all want your clients to be happy to move into their beautiful new home, right? So these are a couple main key parts here on delays and derailing closing is open and unresolved prior claims. You're helping your client buy a new home. The previous homeowner has a claim that's still showing up on their loss history, right? The repairs were probably made, but it just was never properly closed. So additional documents might be required to send to the insurance company before they can move on. So I'll give you an example. I have a colleague of mine. She just bought a home about a month ago. Excited, happy to move in. They found out that there was a fire loss about a year ago, and she couldn't move in. They couldn't close on time. They had to contact the seller's insurance agent, tell them to close it, send in documents that the fire, the repairs were done on the home, and that really pushed our closing a month out. So any resolved prior claims is really important to take a look at. Number two, property conditions, right? So, if you when you go out to the home, if you notice any maintenance issues, any visible deterioration, for example, like a missing handrail, peeling, missing shingles, right? Damaged sidings, any unsafe conditions. The insurance companies, they're going to come out there and do an inspection, just an interior quickly. And if they see any visible issues like that, they can cancel the policy as well. So, for example, um, I took a look at this beautiful new home, right? There's a sliding door that goes out to a deck, but guess what? There was no deck. So the insurance company, uh, they're not going to write a beautiful updated home with safety issues like that. So then the homeowner had to put a bolt on the sliding door so no one could access to that. Three, roof ages, roof condition. This is very, very important with insurance companies. Older roofs, if you notice, it's outdated. A lot of insurance companies are just going to simply just deny it, or they're going to put actual cash value on it, just as a depreciated value. So inspection companies, these things will create last minute delays and derail closings as well if you notice any roof issues. Hard to place risk, a wood shake roof, older homes over 100 years old, right? They just have outdated systems. If the homeowner has pit bulls or Rottweilers, certain breeds, prior histories on claims. Let's say there's three home claims on the prior owner. They want to know, are all the repairs completed? Some carriers won't take fuses for electrical, circuit breakers only. Are there any foundations issues? Is the home in a high risk area, for example, a flood zone, a wildfire, right? So, with the example of hard to place risk, last week I met a retired a business owner. He had a wood shake roof. I went to market for him, worked really hard. All the insurance companies was ineligible, was denied except one company, and we were able to find that. So once again, if you're able to notice any of these things, in terms of the next part here is how you can stay ahead of these potential problems. I would say encourage the conversation early, introduce insurance early in the transaction process, right? Don't wait until the last week of closing to get the insurance because, there could be underwriting concerns right before the deadline, and now everyone's scrambling to close on time. Number two, just, as I mentioned here, just to recap, if you identify any potential red flags, just be aware of it and talk to the client about it. And Number three, I'd encourage buyers to gather information early, right? When there's a home inspection report, it gets sent to me. I get to see everything about the home, and then I can identify any exposures, making sure the replacement cost is correct. So just help gather that information if you have it to send out to the insurance agent as well. And then lastly, just you have partners out there with insurance agents. Partner with your insurance professional early. Just review the home, give them the inspection reports. Are there any obstacles? You want that partner really to go out to market, work with multiple different insurance companies, find the best rates and coverages, just so that way the experience is smooth for the buyer and the seller and the lender and everyone as well. So the earlier the insurance is involved in the transaction, the more opportunities there are to prevent delays, solve problems proactively and keep the closing on time. So most closing delays can be prevented when the conversation starts sooner rather than later. Um, and I hope that is helpful for you all there when you identify any potential problems, because that's very important for you. So a little bit about USI here. We are, one of the largest independent insurance brokerage firms in the world. We're a top insurance employer. We have over currently about 11,000 employees all across the nation, 200 different offices. We've served over 500,000 clients. What makes us different, and I'll go through that shortly, is we have what's known as the USI One Advantage and we have national capabilities. I know a lot of you all, right? You sell homes in multiple different states, so we're able to write all across the country here. And we also specialize. In home, auto, umbrella, watercraft, yachts, aircrafts. We're designed to help individuals and families identify risk exposures, help them with their coverages, and really manage their rates to find them the best rates and coverages in the marketplace. Whether it's someone that's buying their first new home or a condo, all the way up to high net worth individuals that need a $50 million umbrella policy to protect their $10 million home. And really what makes us different from any other insurance company out there, any other independent insurance brokerage firm or captive agent, I know many of you work with, we have an acronym that we call ONE. It's the Omni. We built a proprietary platform in-house where we take your client's information, their insurance program. We have case studies that analyze it, and then we identify solutions, to pinpoint anything when we have the conversation with your clients. We have a network of dedicated experts all across the country. If you have a client, let's say they have $1 million art collection, if I need to pull someone in, to have a further conversation, we can do that. Cyber, aircraft, yachts, and so forth. And our enterprise E means that we're highly consultative. We identify exposures. We're not transactional. We really want to make sure your asset is protected, built in with our Omni platform and our network nationwide. That's really what makes us different from any other firm out there. And a little bit about how we conduct our personal risk analysis. When I work with clients, I identify who they are. Are they an athlete? Are they an executive? Are they just, a first-time home buyer? Who are they? What am I protecting, in terms of their assets? We gather their information, and then we go to market with our proprietary Omni solution navigator here. And our philosophy is really just, how are you financing your insurance, right? There's no point of paying for insurance if by the time you try to go file a water backup, sewer, and drain coverage and you don't have that, right? So how are you financing it? How can I help you improve and minimize claims, right? How can we help, educate you on technologies? Do you have a water shutoff valve and so forth? And then how can we expand or reduce coverages that you don't need? So that's really our fixed approach there when it comes down to risk management. And then in terms of just being a resource, how can I be a resource for any of you? If you need a second opinion, just hop on a call, send me an email. If you ever need to invite me into any meetings as well, happy to just, source there. I work with a lot of agents, and they'll just have a client that will just contact me directly or just send a warm email introduction, and then I can just kind of take it from there. Here's my information if anyone wants to just reach out and have a question, or just if you want a second, an opinion on an insurance program that you're working on as well. Hey, to my current agent, we're trying to go to market. They have, a wood shake roof. I was working with American Family agent. He's actually an agency owner. He's like, hey, I can't write $3 million homes. Can you help me out? Absolutely. And it goes the other way as well. If I can't help out some agents, I'll refer them business as well. So, and then lastly, keeping deals on track. How I work with a lot of my realtors is I'm really proactive and I keep them involved in this whole process. It's not where you send me a referral and then you wonder what happened to the insurance piece of it, right? So what I do is I identify potential issues before they become, closing delays. I'll proactively communicate with the client, the lender, the realtor throughout this whole process. When I go to market and I have that insurance proposal, I'll send it to the client and I'll CC you in on it as well. So that way you know what stage of the insurance process it's in. I'll work directly with the mortgage lenders to satisfy any requirements. And then when clients say, hey, I'd like to bind coverage, let's get the insurance on it. I'll CC you as well, the lenders, all parties, and I'll provide proof of insurance to all parties, so that way hey, my client's taken care of. We can close on time. And then lastly, at USI, we take care of clients, at annual reviews, 150 days out before a policy renews. We're doing reviews on the policy. Are they best as is? Should we go to market again? We identify exposures and so forth. So we really do take care of the clients, and client retention rate is very important for us at USI. And then finally, we love to give back to the community. Everyone at USI, we're able to give a day back, and that's thousands of hours back to our community all across the country. And but there's a lot of award winning that, the culture at USI, best place to work, top insurance employer, and just a great company to be a part of. So, and then with that, any questions? Hope this was helpful for you. Any questions for you?
Yeah, I have a question to how does home warranties play into home insurance? Do those two worlds ever connect?
Yes, that is a great question. So how when I talk to my clients is number one, there are endorsements that you can add on the homeowner's policy for let's say there's a electrical surcharge, something happens, right? Yes, you can add those endorsements. But if there's anything, let's say for maintenance and repairs, I would highly recommend you contacting another company that does warranties, right? Because at the end of the day, insurance is every time you file a claim, it can impact your rates. Or when you go shopping again, when I say shopping, when you take your insurance program and you go to market again, if you see five different claims for $200 or $0 or $500, a lot of insurance companies that can be ineligible, right? So I would, a lot of insurance is for catastrophic losses, right? If you have to, a water backup sewer and drain for 20,000, 30,000, right? So I would say anything that's maintenance related for warranties, it's highly suggested, just trying to see if you can get the warranties elsewhere. But great question.
Thank you.
You're welcome.
Yeah, I don't think we have any more questions unless we could give them a few more minutes or something. But
one quick question.
Oh, go ahead, Jeff.
Sorry, Jeremy. The contact information on your sheets, are we going to get that emailed to us? Or I grabbed a screenshot of it, but I just wonder if that you have that deck that we can get.
Yes, yep, absolutely. I can send that over to Kathy and Jeremy here as well. Absolutely.
Perfect. Thanks for your time and for all the great info.
Yeah, no problem. Happy to help. You guys have a great day. I know it's raining a little bit here in Minnesota. Stay dry, and appreciate the opportunity. And if you ever have any questions or a second opinion, happy to help out.
Perfect. Thanks, you too. Appreciate you.
No problem. Bye-bye.
Bye. Thank you, everyone.
Is that a wrap?
Yes, sir. Jeff, thank you.
All right, thanks, Jeremy. Thanks, Kathy. Have a great days, everybody. Bye-bye.
Bye-bye.